So good afternoon, all of you. Good evening to those outside India. Good morning. So we have participants from different zones in India, in different parts of the world. I Dushyant Parashar, welcome you all to the webinar presented and hosted by KBS. The topic of the webinar is regarding the strengthening of the BRSR assurance preparation. What are the insights for companies to strengthen their BRSR assurance preparation today? Covering it the technical and the assurance perspective both. The webinar will be presented to you by Mr. Abhinav Raj. Starting the webinar, I'll just slightly give you an introduction of KBS. KBS Certification Services is a 20-year-old company with 2 decades of experience in validation, verification, auditing, and certification part. The KBS got its accreditation under UNFCCC in 2011, and since then we have successfully validated and verified more than 2,500 projects, 2,500 validation verification projects covering more than 35 million carbon credits. We have our sustainable vertical team, which is working for carbon neutrality projects, for the GHG validation verification projects as per ISO 14064, road support to the industries for roadmap to nodes. Then sustainability assurance. We are also the license holder for AA1000 AS and the BRSR Assurance services, for which the sites will be presented by Mr. Abhinav Raj today in the webinar today, for how the companies can strengthen their preparation, their BRSR report. Since the BRSR report is not just a compliance nowadays, it has become and emerged as a competitive edge for the market for a company. So if you want to take the benefit, to take the advantage of your expenditure on the BRSR report in purview of the production and the profit, then please do attend this webinar, and looking forward for it. So I now give the stage to Mr. Abhinav Raj for his webinar. Thank you.
Thank you so much. Good evening, everyone. Today here presenting webinar. So before we begin today's session, let me describe about today's session, what we are going to discuss in this session. So the main question is, why do companies with the well-written sustainability reports still they struggle during BRSR assurance? So in today's session, we are going to answer that specific question. So this is not a session on report writing or disclosure language, what we adopt while report writing. So in this session today, we are going to discuss how assurance actually works in practice, in practical, what challenges we face during assurance process. Everything I will share today is based on real assurance experience, what KBS has gained, our team has gained, has faced during assurance activities, where how issues arises, where auditors are facing problems, and why disqualifications actually happens. Let us start today's session. So let us understand what BRSR assurance technically covers. So let me start by clearing the most common misunderstanding around BRSR assurance. BRSR assurance is not an evaluation of sustainability, ambition, intent, or any commitments. So auditors are not going to assess whether targets are ambitious or policies are well drafted or not. They are asking one fundamental questions. Can the reported information, whatever reported informations come from client side, that could be trusted or not? So basically assurance conclusion, it completely depends on mainly three things. First one is whether ESG data is generated through defined and reportable process. Second, where whether disclosed or supported, it is supported by verifiable evidence or not. And the third is whether the data align with clearly defined reporting boundaries or not. So if a number or a statement cannot be traced back or sources are recorded, it cannot be assured. This is why most assurance issues have nothing to do with sustainability ambition and everything. It has to do with the controls and traceability of data. So let's say, for example, a company may disclose that it has an energy management policy, but that policy itself is not assured by any third-party auditors or verifiers. So auditor, they are going to look for evidence for that energy data. I mean, is data is actually captured, it has been reviewed or not, and whether that data is traceable to bills or your logs or not. So let us discuss about assurance standards which govern BRSR. So BRSR assurance in particularly BRSR assurance in India, it does not operate in isolation. It sits at the intersection of two frameworks. The first is ISAE 3000 that governs how non-financial assurance is performed. Under IC 3000, auditor follow a risk-based approach. Where there is higher risk areas, it receive deeper and more extensive testing. So auditor also apply its, I mean, they challenges its estimated values, how that data is assumed, and water management judgments, especially in emission and workforce data. The second piece framework is that the second framework is the SEBI's BRSR core. So SEBI defines what indicators must be assured. And what do ICA do? ICA defines how assurance is performed. If either framework is not satisfied, assurance issues will arise. Even when your data appears reasonable, even though it will, assurance issues will arise if it is not, if framework is not satisfied. Uh, we are going to discuss in this slide core dimension what that is tested in BRSR assurance. So one scope is defined. Auditor, what exactly auditors do? So they test BRSR disclosures across these five dimensions. The first is accuracy, whether calculations and numbers are whether your calculated numbers are correct or not. Second is completeness. So whether all mandatory indicators are reported or not. And third is consistency. So alignment across sections and across years need to be there. And the fourth is existence, whether activities actually occur and can be that activity can be evidenced or not. And the fifth is boundary adherence, whether data related only to controlled operations or whether it comes outside of your boundary area. So that these five dimensions are the basic we can say a pillar what our auditor basically test during BRSR assurance. And let me give you a simple example to show how this five dimension actually worked together. Assume we are looking at a scope one diesel consumption for a manufacturing site. Let's say we can take example of a manufacturing site. So first we test accuracy of your data. So whether in that we check whether is number whatever you have calculated that is correct or not. Did we multiply, let's say for did we multiply the diesel quantity with the correct emission factor, or did we make a calculation, any calculation mistake, I mean, has been made by client or not? So second is completeness. So under completeness, we check is anything missing? Did the client included diesel used for all 12 months and all these sites, or only part of that year? Third is consistency. So under consistency, let's say we check whether is the diesel quantity is the same in the emission table, working file, and your last year's comparison. So its simple meaning is that one number should be everywhere. There shouldn't be different number in different places. And fourth is existence. did this actually happen or not? So under this we check whether suppose you are producing your fuel invoice. So we match whether your fuel invoice and DZ logbooks exist to prove that the diesel was really used. So this means that paper proof that actually happened needs to be there. So under boundary adherence is one of the most misunderstood areas in BRSR assurance. It is also one of the highest risk areas. So auditor do not start with honesty; they start with control. Control means who make operational decisions, who control fuel uses, who control electricity consumption, who controls your workforce management. This is where most first year assurance engagement struggle, who are in their first year of BRSR assurance, what we have seen. So if boundaries are unclear, I'm telling you, inconsistently will be applied, and assurance confidence will be dropped automatically. So even if you are even if you have calculated your data perfectly, it cannot survive assurance if boundaries are wrong. Let's say, for example, a corporate office may be full on, but electricity is controlled and billed by the building management, even though company operates there. So auditor usually exclude scope to emission unless operation control can be demonstrated by client. Most assurance qualifications do not arise because data is incorrect. They arise because auditors cannot obtain sufficient and appropriate evidence. So, like common triggers here, what include is that data cannot be, reconciled to source records, like documentation, even documentation that is incomplete or it does not cover the full reporting period. Unclear if you are producing unclear or selectively applied boundaries, or whether you have undocumented, or your methodologies are inconsistent. So when this risk arises, definitely auditors respond will be very predictable way. They will expand your testing of your data, and they will request you additional explanations why these things are happening. Auditor have already decided that usually spend here. So these issues need to be solved. If these issues remain unsolved, report is errors. For example, describe one example for you guys. So we often see fuel invoices available for the full year, but when we check DZ logbooks, maintained only for a few months. So in such cases, auditors cannot rely on the data and typically expend testing or request estimation with your disclosures. Auditors always begin assurance by understanding, the organization boundary. So they verify whether entities included in BRSR align with your financial consolidation. Auditor always assess whether ESG reporting follows the same control logic as a financial reporting. There are chances of exclusion, such as joint ventures or dormant entities that are reviewed in detail, and those all details also reviewed in the detail. So each exclusion, that whatever there is exclusion, that must be documented and it should be approved by top management. Any mismatch between ESG and financial boundaries is basically considered high risk, and it is the most common cause of assurance disputes that happens usually. Let us discuss operational boundary. What exactly is tested in this? So, after organizational boundaries, the auditor basically moved to operational boundaries. So they examine who control fuel procurement, and the uses of fuel, who whatever electricity is used by industry, so who hold electricity contracts, and who finally who are going to pay that electricity bills. Not only this, auditors also check who hire, who pay, and how this workers are managed on the sites. So they basically assess who controls your day-to-day operations. If operational control cannot be demonstrated, ESG data from the site, from that site, specifically from that site, cannot be reliably assured. So the main thing is that operational control needs to be identified, it should be demonstrated, and it should be very clear. So what are exclusions? So exclusions are, it's very sensitive in specifically in BRSR assurance. Here, or basically as auditor, what we see is we expect every excluded unit to be, clearly listed by the clients, and each exclusion must have a documented, rational support by the contracts, or in within countries governance documents. So exclusion, whatever you have excluded, that logic must be applied consistently across all your KPIs. It should be reflect across all your KPIs. It should with that you have shown selective exclusion almost always. It always will result in challenges for auditor. Common boundary related to failure. So let me share what auditor mostly commonly see. So emission basically reported from rented control premises, or workforce numbers that do not match with the payroll entities. We have faced this situation during our sustainability audit, in fact, where our workforce numbers were not matching with their payroll entities. Electricity consumption reported where billing is controlled by any third parties. This is where we typically see late stays, last stage rework we have to do, and in fact, client have to do. So these issues usually force, recalculations of your all data, and it create challenges for disclosures for client as well as for us also. So if these issues remain unresolved unresolved, and you go for assurance, they will this issue will significantly increase the likelihood of your qualification for assurance. Let understand this from example. So a common situation is a workforce data consolidated centrally, while your payroll entities are excluded from your ESG boundaries, what you have disclosed. So this mismatch will usually identified late in your assurance, and it will actually lead to a recalculations of your disclosed report. So that's why we have to, keep consistency across all our data. So what are best practices? One document significantly it will improve assurance outcomes. That document is the your boundary definition note. So you have to prepare that. It will, and under that, it should be clearly defines your organizational and operational boundaries. What are your organizational boundaries? What are your operational boundaries? And there should be a list that should include and exclude entities and sites. You have to mention what sites you are including in your disclosure, what sites you have excluded. So that should be clearly mentioned in that list. Document whatever rational or management approval you have taken, it should be clearly mentioned in that document. So from an auditor perspective, this document is basically a key planning input. We can say it a key planning input for your assurance activities. So when it is done properly, It prevents, last minute dispute, and it will reduce your qualification risk for your assurance. Let us discuss emission assurance. Why highest scrutiny happens here? Everyone, talks about scope 1, scope 2, and scope 3 emissions, though BRSR core has very diverse parameter. But we always focus on emission data. So emission data basically receives the highest scrutiny in BRSR assurance, in fact. So emissions are fully quantitative and it is comparable. So they are closely monitored by investors and regulators as also. Investors and regulators primarily focus on your emission assurance, emission data. So I know everyone knows that they are calculated using standardized methodologies, and those methodologies standards are cross-checked by auditors whether those methods have been adopted or not. So because of this, auditor always apply, lower materiality thresholds for these data. Even small gaps in that evidence or any, assumptions will definitely is going to attract scrutiny of your data. So let's say understand from example. So using two different emission factor for the same fuel across sites may not change totally, total emissions significantly. But auditor is still it will they will flag it because comparability and consistency are compromised here. Let us discuss about your scope 1 emissions, how evidence are tested here, and what actually auditors see here. So scope 1 emission relate, as you know, everyone knows that a scope 1 emission relate to the direct emissions under company's control. So auditors start with fuel purchase invoices, then they will review your DG set and your boiler fuel logs. They are going to examine your vehicular fuel users records. So you have to maintain all these records, all these logs, all these invoices along with you. All operational data you have to, you have to reconcile it with your financial ledgers. Any break in this reconciliation chain is going to increase assurance risk. Suppose, let's say, for example, a factory reports diesel used for diesel sets. So auditor first check diesel purchase bills, then look at a diesel logbooks to see if that diesel was actually used or not. And finally, they check whether the same diesel cost appears in your financial ledger or not. Whether you have paid that bill for that amount of diesel, whatever you have consumed or not. So if these don't match, definitely assurance risk is going to increase. So let me say that you have to maintain your bills, you have to maintain your logs, and you have to maintain your accounts. And it should say the same story. What amount you have used, what amount you have, you have mentioned in your bills, whatever in bills the amount is mentioned, that should reflect in your logbook, that should reflect in your laser book. What are technical gaps usually occurs when we evaluate scope 1 emissions? So even when data exists, technical gaps, are there common. I mean, fuel uses, sometimes there are fuel uses based on estimates. Sometimes there are missing calorific values or that are undocumented in your reported documents. Sometimes wrong emission factors are used by clients. Sometimes there are inconsistency in unit of measurement. So these issues will reduce auditors dependence, and it is going to trigger, uh, trigger expanded testing of your existing data and evidences. Let's say, understand this from example. So a company has a diesel quantity, but uses an old or copied emissions factor without knowing the source. So the fuel is recorded in liters at one site and a kilogram at another site without conversion logic. So even if data exists, auditors will not rely on this. They will question mark this data, and client have to give detail clarification regarding this. So, let's say what auditor is going to face when they evaluate scope 2 emissions, basically during electricity testing. So, scope 2 assurance is basically, driven by, we can say it is driven by your traceability. So, auditor, what exactly examine here is electricity bills and meter readings of meter readings of that you bill, what meter readings you have taken. So from BRSR perspective, they here confirm use of CE emission factors. Whatever current CE emissions factors in that particular financial year has been adopted during calculations or not. So if they reconcile your consumptions with your financial record, what amount of your bill you have paid every month, and whatever amount of electricity consumption you have given in your database, or we can say so on your disclosure report. So that is checked, cross-checked by auditor. So, moral of the story is that electricity data must be traceable from bill to final disclosures. Without there shouldn't be any gaps between your bill and your electricity data consumption. So let's say, for example, auditor take one electricity bill, check the units consumed, they match it with meter readings, and then trace the number into the emission calculations and the whatever you have disclosed in your final report. So if the number change anywhere in between, assurance confidence is going to drop. They are going to raise clarification. They are going to sought clarification for this particular issues. So while you are reporting your electricity consumption, or you are calculating your scope 2 emission, these points needs to be considered. So let us discuss what are technical requirement, how auditors see scope to key technical requirements. So there are listen, there are three non-negotiable in scope 2 assurance. First one is the emission factor, whatever you have used, that should be uniform across all your sites. Suppose you have multiple sites, there are multiple data come from multiple sites. So somewhere different emission factors are used, somewhere different factors are used. So that should be, clear. There should be a clear separation of actual and estimated data. That should be clearly identified. And the most important part is transparency in your, if you assume any figure, any emission factors, there should be a transparency in that. If you are going to mix actual and estimated data without any explanation, it is going to create a risk for your assurance, your data. And auditor will shout additional clarification for this. Let understand this with the, one example. If one plant use actual electricity bill and another plant use estimates without saying so, without disclosing it, so auditor is going to flag this immediately. So your actual and estimated data must be very clearly separated and it should be explained. Data methodology documentation. So auditor do not assure numbers. They assure methodologies. Their focus is on your methodologies. So each quantitative KPIs, whatever you are reporting, that must have a documented formula. Unit must be clear. Conversion factors, whatever you have adopted, that must be justified. Assumptions, any assumptions and any exclusions what you want to report, that should be documented and that should be reported in your sustainability disclosure. So transparency, there should be a transparency in your assumptions and exclusion whatever you have taken. And the most important part is sources, whatever source you have used, that should be very credible and that should be documented as well. Any undocumented methodology turns your data into, it is going to create a liability for you. Let's understand with a very good example. Like say, if someone asks how an emission numbers was calculated, and the answer is this. This is we like we did it last year. Auditors cannot accept that. That should be, very well written, and ex auditors expect a written formula for that. For units for your source of emission factors, that should be clearly mentioned on your report. Internal controls over ESG data. So strong assurance depends on strong controls. Auditors expect maker or checker process. I mean, they define data cutoff dates, version control, whether work flies, documented change logs, any formal management approval. So this needs to be clearly indicated. Strong controls automatically reduce audit efforts, and it is not going to create any assurance risk for this. Let's understand this with the example. So if one person prepares the emissions data and the same person approved it, so auditors see this as a control weakness. But if one person in your organization prepare it and another reviews that and management sign off that data, so automatically auditors efforts reduces here. So yes, let us understand what assurance conclusions are driven by evidence or not. So payroll records. I think slide has been dropped. So assurance conclusions, basically it is driven by evidence. Payroll records support your workforce disclosures. Attendance record is going to support your training hours. So these are the factors. Let me. These are the factors. Just a minute. I think. Yes. Sorry, everyone. It was disconnected. Yes. So we were discussing about evidence path. So assurance conclusions are driven by evidence. Payroll records have to support your workforce disclosures. Attendance records, whatever you have prepared, that should support your training hours. Any grievance registers, whatever you are addressing, you are preparing, that should be that should be kept as evidence. So social and workforce data is, frequently challenged, and workforce numbers most reconcile with your payroll and filings. So your worker classification must be consistent. Training hours, whatever you have shown, that must reflect your actual attendance. So basically, good documentation here is significantly going to reduce your assurance friction. Suppliers' ESG disclosures are treated as a greenwashing risk areas. Auditors here expect a risk-based screening approach. They are going to test, your sample supplier assessment records. Absolute statements is going to attract deeper scrutiny of your statements. So any unsupported claims, often it will require, disclosures revision. So you have to make sure that there isn't any unsupported claim. Whatever you are disclosing in your report, there shouldn't be any undisclosed unsupported claims. So let us pre-assurance is a yes, sorry. Excuse me. Yes. So we were discussing about suppliers ESG disclosures and water risk of greenwashing risk. So supplier ESG disclosure treated as a greenwashing risk. Auditors always expect a risk-based screening approach. They are going to test your sample supplier assessment records, and absolute statements will always attract deeper scrutiny. So any unsupported claims will require your disclosures revision. Pre-assurance mock audit. So pre-assurance is a mock assurance exercise. Basically, it is conducted before any formal audit, whatever industry is going to face. So it basically in pre-audit, it tests whether data against source or records is consistent or not. Under pre-assurance, we usually check whether sorry everyone. So under pre-assurance, we usually check whether data, whatever you are reporting or disclosing, is uh, is consistent or not. So assurance expectations are steadily increasing here. Whatever systems will be built, it will only for limited assurance and it will not scale. Organization have should organization must sure that systems their whatever systems they have built, it should be strengthened. Standardized ESG data collections. They should focus on standardized ESG data collection. They should strengthen their internal controls and their governance. They should train their internal teams on assurance expectations, what auditors are going to expect during assurance activities. So the organization should train their team during pre-audit phase, and accordingly, all evidence should be built by organization and the team which are going to face audit BRSR audit. Whatever embedded ESG or whatever whatever embedded ESG they have should they should frame it in their whatever gaps they should identify as early as possible, and they should frame that those identified gaps in their internal audit frameworks, and it should be reported and signed off by their management. So let's conclude by saying this BRSR assurance basically test your systems. It is not going to test your narratives. Sorry. So assurance expectations are very, steadily it increases. Systems whatever built only for limited assurance will is not going to scale. Organization has should strengthen their system during their pre-audit phase. Whatever data they are collecting, that should be standardized. They should strengthen their control and governance system. Excuse me. They should train their team on their whatever assurance expectations, and they should embedded ESG into external audit frameworks. So let's to conclude this, I can say that BRSR assurance tests your system. It is not going to test your narrative. Whatever information and workflows data you carry, it will only focus on your evidence, and methodology drive outcomes. Whatever emission and workforce data you carry, whatever emissions and workforce data you report, that carry the highest risk while reporting. And the the main point is that pre-assurance is your strongest safeguard. Your strongest safeguard. So like if even industries which don't require BRSR assurance in this financial year should initiate pre-assurance activities like industries for this financial year who are out of uh, 500 listed form. So they should take pre-assurance activities for their organization. So it will play a very, strong safeguard for them. And it will help them to identify whatever gaps they have in their within their system, within their organizations. And by the time it will give them a, uh, give them a very safe passage while reporting their actual I mean disclosing their assurance in next financial year in next financial year. So it is my request to all industries who are right now out of 500, they should take pre-assurance activities. Thank you for today. And I will ask Dushyant. Hi, Dushyant. Is there any questions or answer, any clarifications, any point?
Yes, thank you, Abhinav. Thank you for the great insightful webinar you have given. And I hope those who have attended the webinar, those have got the clear understanding of how and what steps to be taken for getting their BRSR report best assured and to get the clear benefit of the investment of time and money they are doing it in their BRSR report. So, although we have received many of the questions, we will be taking a few of them as per the time allows. So, the first question we have received is from just a second. Yes, Abhinav. So the first question is, what does the sufficient and appropriate evidence really means in BRSR?
Okay. So let's say, I mean, it means that evidence that allows independent verification, uh, cover the full reporting period, and it reconcile with your financial and operational record. Let's understand it from example. For scope 1 emissions, like fuel invoices alone are not enough. So auditors expect invoices against your fuel, DG set logs, and it should match with your financial ledger. So there should be consistency across all your data. Any other question, Dushyant?
Yeah. Thank you, Abhinav. The next question we have received is, where does the assurance scope usually expand or audit becomes difficult?
Okay. So scope basically expand when boundaries are as I was discussing during boundary identification, like when your boundaries are very unclear and whatever evidence, whatever data you have reported, whatever numbers, figures you have shown in your BSR report, that is that against that evidence, if evidences are missing, or whatever methodologies you have adopted, if that are undocumented, so definitely that will increase, detailed testing of your data, and it will further raise risk for your data. So let's say for example, if a joint venture is included for emissions, but that is excluded from your workforce data. Like one place you have mentioned that this organization is in your JV, and emission factor for that you have reported in your report. But when we check your workforce data, so that is missing. So definitely this is going to expand testing of your data.
Yeah,
Uh,
thank you, Abhinav. Thank you for the answer. Next question we have from Mr. Jaishankar, that is, how critical are organizational and operational boundaries in assurance? So the questions are related to the boundaries itself. So can you explain
yes,
this?
as have already discussed in this webinar. So boundaries are not foundational. Even accurate data cannot be assured if it relates to entities or sites not under operational control. Let's understand from example emissions from any leased sites uh, where honest controls your electricity are typically excluded unless control can be clearly demonstrated in your disclosures. Thank you.
Yeah,
Is there
thank you,
any more
Abhinav.
questions or?
Yeah, we have two more of them. What most often
Okay.
triggers a qualified assurance opinion?
So any unresolved boundary issues, if there is inability to trace data to source records or any incomplete evidence for the full year or any undocumented methodologies. So this is going to trigger your assurance of opinion on your report. Let's say, for example, any electricity data without bills or several months of an it will lead for it will leads to qualification if not it is not resolved.
Thank you, Abhinav. So the last question that we have is how pre-assurance really help?
Yes, this is what I was discussing in last slide. Like pre-assurance actually reduce overall efforts, your overall efforts, we can say, by identifying your boundary, your evidence, and whatever methodology you have adopted in calculations of your data. So it helps us to identify gaps in that at early phase before you go to final to final in financial year you are going to submit your data. Prior to that we can conduct pre-audit, help you in identifying all your gaps. Like suppose for example we can say that any fixing emission factor, like there are inconsistency. Suppose there are chances, there may be chances that their emission factors are inconsistent among your, if there are multiple plants, and whatever data coming from your multiple plants, might be there are chances that different emission factors has been used. So that we can, a company can fix that in their pre-assurance phase. Is there any more question, Sushant? I mean, if anyone asks, can ask. There is one QA
No, Abhinav, I think these are the only questions that we have
section.
received.
Am I audible, Sushant?
Yes, yes, you are audible, and these are the only questions that we have received till now. Anybody who wish to ask or have any other further questions related to the BRSR, they can post us on our mail. So the mail ID is available on the website itself. You can just share your thoughts there, and you can also share your feedback. And if you need any, if you really want to recommend any other topic for next webinar from KBS certification. Keep following KBS certification for the latest updates and the technical updates related to the BRSR, CBAM, sustainability assurance,
Sure,
GHG
sure.
verification.
And thank you everyone for joining this webinar. As Sushant told, you have any clarification you need.
Thank you, Abhinav. Thank you for the
Thank you
insightful
everyone.
webinar.